All right. Good morning, traders. Good morning. Good morning. Give me 1 second and you'll be able to. You should see my screen. You should hear my voice. You should be able to talk to me, talk to each other via chat. Let me just make sure I have everything set up. Okay. Yes. Happy Sunday to you, Gray Lynn. Good to see you as always. Good morning, Don. Good morning, El Jago. We're going to give it just a minute. Let everyone who's coming in get in. My Thinker Swim reset on me every time on Sundays. Every time. Good morning, Kent. Good morning, Don. Good to see you. Good morning, Sandy. Good morning, Steve C. Good morning. Ask for a password. Huh, Linda. Yeah, that is not expected behavior for sure. Was it Zoom asking for a password or yeah, it shouldn't do that. Maybe it was saying if you're the if you joined, yeah, I'm not sure why it would do that. I'll look into that. I'm glad it didn't force anything else. Same. Craig, has that ever happened you to you before? No. Was it the Circle app asking for a password, or was it Zoom when you were joining the meeting asking for a password? So weird. Everybody's saying the same thing. Zoom. John said it happened. Zoom, Linda. Thanks for kicking it off, Linda. I will do some investigation. That's three people. Good morning, Vladimir. Okay. All right. Some had it, some didn't. But apparently on the Zoom side, I will look at the settings. I will try to figure it out. Thank you, those who let me know. The app path worked fine. Okay. Okay, Craig. That's useful. I'm going to go dig into it. So good to see everyone. Happy Sunday. Welcome to the Options Income Launchpad Sunday Market Insights. I am Scott. As always, what we do is for education, illustrative purposes only, nothing intended as a recommendation to buy or sell. We're not brokers or advisors. We don't give financial advice. Decisions you make based on information provided here should be done so at your own risk. Yada, yada, yada. What are we going to do? Woo, let's get there. We are going to posture. I'm looking for another, maybe even 3/4. I mean, even now, still showing strength. Like this thing wants to move into just a solid bull market, apparently. And I am willing for that to happen. We'll look at the economic calendar. It's the first week of the month. What does that typically mean? Employment data. So we'll have job openings, which is tightening, right? We're seeing that tighten a little bit. We'll have ADP. ADP's a little more volatile, a little less reliable. Nothing has been catastrophic yet. Most of what we've seen by way of labor market weakness is, at least for the time being, more anecdotal than it is found in the data. A couple of months of slight slips where we went negative, like negative 70,000 or something. Then we have little rebounds. So we'll see what it is this month. And of course, the weekly jobless claims has been quite consistent in the low 200s, which is a pretty good place. So as long as employment stays intact, we have pretty good prospects for moving into bull markets, in my opinion. Okay. We've been doing some sector searching, actually. I didn't put them in my list. Maybe we'll do that today on April 28th, whatever day I made notes. We did industrials and consumer discretionary. We'll see if those two sectors are still showing strength. We still should probably go through technology and find a new class of those guys. Um, that's what we'll do on Tuesday. We'll plan for that. Build our opportunity lists, and we are moving on to section 6 this week. Those of you tracking on the trading plan, section 6, which is record keeping. The next 2 weeks, we're working on your trade logs. If you've been around a while, you should have a well fleshed out trade log. If you're new, we have a pretty strong trade log. It's a 100 at a time set, broken into 4 blocks of 25. It's a nice structure to allow you to identify the internal components of the trading and see not just are we making money or not, but what's happening with our winners? How big are they? What's happening with our losers? What's the ratio? What's the expectancy? And that's where we try to produce the levers that we're going to implement in our trading. What are we trying to, when we make changes to our trading, what are we trying to accomplish? We should have a very specific, not just like, oh, I'm trying to accomplish making more money. Oh, really? Ooh, that sounds great. What are we trying to accomplish? It should be specific. I am trying to make more money when I'm right. I believe I'm leaving money on the table. I'm cutting my winners too soon. That's a focus, right? If your pattern shows you that, you're going to put rules in place that are focused on trade management, that are looking at how do I give the trade the ability to make more money, set better targets, stay in longer with the way I adjust stops, so that I don't just take profits the second that I have some. Or you might say, I am working on cutting my losses short. I have too many losses that are getting too big. And I'm going to be focused on that. That's going to be more early in the trade. Initial stops, manual trade closures, things like that. You might be thinking, I need to be right more often. I'm only right 30% of the time. I'm getting 2 to 1, 2.5 to 1, but I'm only right 30% of the time. I need to have better, signals that are more consistent. And each one of those is going to have you focusing on a different aspect of your trading and the rules that you're implementing for that. That's why we need to first start with what are the numbers so I can see where I might be able to make improvements, then work from there to make the adjustments to my trading rules. That is today's trading plan soapbox lecture, sponsored by coffee. Okay. Whoops. Let's go take a look at any brand of coffee will do. You get to pick. Mine is, I think it's great value from Starbucks. It's the cheapest little pods. It tastes great. You should try it if you haven't. Okay. Let's get set up here. Sandy. The funny thing is, I still do it. I still am looking at the connections. All right, let's get the Oracle ready. Go into the long term. That's the first thing we'll do. We will need this. Actually, we'll come back to that. Geez. All right, let's just get some charts ready to go here. And let's get the posture log ready to go. Um, and let's paste. Let's make it 0503. Cannot believe we're the third day of May already. Oh, 05, May 26th. There we go. Let's see if my issues have worked themselves out over here. Here we go. We will need this one. We will need this one. We will need you. And okay. Oh 05, 03, 26 chart. Let's get going. I like that we're back to an easy spot in here. You can see that we dropped out, smashed up, boom, right back right here. We got back in, and now it's kind of slowing. It's getting close. It almost touched the top there. And so, if it gets to the top of this and then just sort of drops a little bit, I would be like, yeah, that looks fantastic. Of course it's going to pull back at some point, though. This is where we have to be careful, right? Where we're like, oh, look, it could go like this, and then like this, and then and just sort of like grind along the top of this, and then you would be like, we just had 3 more weeks of good bullishness. So we don't want to in our market posture look at this and think it's almost at the top. Look back here, how long it just sort of was up in the upper half, just moving along, and most of the time it was overbought. So this is where we have to force ourselves to prioritize the chart and weight what weight we're willing to give something. We can't be like, oh, well, it's overbought. No, this, in fact, for this analysis, we don't even care about down there. That doesn't really weigh in. We don't take away because it's up at the top or give because it's at the bottom. We score the lines. We make note of, but like I said, this could be bullish for 3-4 weeks, just grinding along the top, popping up a little bit here and there. And people the whole time are like, it's gonna fall soon, it's gonna fall soon, it's gonna fall. So don't get into that mindset, especially as our market posture continues to expand. That posture is developed very much around institutional activity and mindset. So for me, this is an easy one because it's in my 1.25 lines. The only way for it to get to a 1.5 is it to break higher and then convince me that it's moving like the trajectory of the blue and green back here. That's 1.5. Okay. I'm going to clear my lines. I'm going to take a quick picture. And need to move this for later. Let's go put that in. So mine's going to stay the same, 1.25. See how fast today's analysis is. Oh, it upgraded. This is now consistent with your 1.5 zone. Okay, I don't know. So I feel like, you know, the 1.5, I mean, it is moving fast, but we don't really have the trend. Do we say it's in the red, or do we just leave it and see what it does next week? I feel like leaving it. It's kind of been the model. Um and it'll probably have to pull back its score if the market has a pullback where we won't. I'm gonna leave it. You gotta let the little bird fly. Sometimes you gotta push him out of the nest and see if can't just coddle him forever. I agree. It looks like it's kind of slowing into the trend we have mapped, but um upgrading trend versus strength of trend, which is showing up here. Um I didn't even ask a question. All right, well, I'm gonna leave it. 1.5 it is. Let's go market posture and 1.5. All right, let's see. Short-term trend. Short-term. Okay, we're there. Short-term trend. 05, 03, 26 chart. Now we're coming in at a 0.5. So for me, this is an easy one to add a 0.2. Let's get down here. 1, 2, 3, 4, 5. So we tested a little higher, pulled back a little, and then popped to a new high. Yeah, a new high, great quarter point for me. I'm gonna move on up to a 0.75 now. He's already at a 1.5, so I don't know. Does he go higher? Don is a 1. Okay, that makes sense to me. I think 1 is a reasonable score. Yeah, if you're scoring before or even during and you're coming up with a different or a same, I love seeing how you guys scored. It's helpful to me. Let's put this in. Nope, that's not the right one. Oracle here. Go. Sandy's a 1. I mean, I do feel like I feel like I'm maybe a little behind on it. It's a lagging score on purpose to keep it intact on the downside, but sometimes it does feel a little lagging. 1.75, so it's up a quarter point. So the same score up, but the Oracle is a full point ahead of me. Who's close to that? I feel like everyone else is in the same area, closer to a 1. I don't know. Maybe I need to accelerate. I'm gonna go back and I'm gonna evaluate if I am behind this score. Yeah, that's definitely at least a 1 at this point. I mean, it's even if it transitions into this. Let me draw what this is to me. Even if it transitions into this, I mean, that's a 2. Yeah, I'm behind. I'm going to a 1 as well. I'm in a catch up here. Um, yeah, it's good to be methodical and conservative, but clearly, when I look at that, that's better than a 0.75. I'm going to go to a 1. I feel behind a little bit. Okay. Gabe says his AI wants to go to 2. Our Oracle's at a 175. It's like, hey, there's momentum there. What are you guys waiting for? Okay, that's fair. It's a fair call out. I know my volume's not changing. There's just not enough there. We'll see what the model, what the Oracle decides. I'm going to cut this back to 7 days. It may not feel like a lot, but I don't know. Kind of it is to me. And let's get volume here. Okay. Let's go to volume analysis. 05, 03, 26. Now I'll go say why you can see all that other volume has fallen off of our chart. We have 1 day of above average volume. This day was close. This was like a big day, but there was still a heavy average from that big pocket. And that was buyers, which is good, but it wasn't above average. We don't get to just like decide to score it because it fits. Certainly, the slope here is strong. But as of right now, we have 1 buy day. So my score here is a positive 0.25. That's an easy one, which it's exactly what it was. I was a 0.25. I'm still a 0.25. Don's a 0. Okay, Don. I mean, that's fair. It's not like there's a lot in that volume. 0.5 with only 1 above average. I feel like this one is a little out of bounds. Only 1 day with above average volume. Still thinking 2.5. Or still thinking 0.5. Okay. Yeah, it needed a little guidance there. You can't just be like, hey, now it's a 0.75 because the trend is good. You're like, this is the volume component. You're scoring above average volume days. And there's 1. I don't see how that builds to a 0.5. You need 3 and 0 on the other side. Now you have a 0.5. And if you have 5 without any, then you're at a 0.75. I don't know if I can't remember a time ever in 15 plus years doing this analysis or some very close variation of it where the volume was a perfect score. Sandy may remember because she was part of encouraging the first full 1 point score. And we've been a little bit more willing to give some strong scores for certain conditions, but not often. Okay. 0.25 it is. Let's get ready for a major market analysis. 05, 03, 26. I think Stephen D is driving today or traveling today. Stephen D, we miss your commentary. I like hearing where folk are. Okay. I am a 0.75. I just don't see that getting better than that. The Oracle is a 0.5. I actually see it being able to get better than that. So let's go see what we have. This will be the first perspective. What do we see here? We see the Russell that I questioned, that I said, uh, I'm not sure that the small caps can do it. They did it. They held on. They held up. They moved back into this leading position. Now we have the NASDAQ in a secondary leading position, at least from this perspective. We have the S&P here, and we have the Dow lagging. That is a classic bull perspective. That looks great. It's a good starting point. We can build from that. What do we have here? More of the same. Let's get a picture. Oops, I need a better picture. And let's put that here. And what do we see? Russell, NASDAQ, S&P, Dow. The classic bullish setup, everything moving into position for an ability for sustained move. That's in institutional alignment to what we would expect for a bull market. Let's go to 66. Tell me if you see something concerning that I'm not talking about. Even on 66, when we had this, conglomeration down here, and then we moved up, and what do we have? Small cap, NASDAQ, S&P, Dow. Now, you might say, well, if on all three time frames, why aren't you giving it a one, Scott? Because it's just not long enough and strong enough. We just barely fought our way back. It's barely there. It's not well established. So I think a 0.75 is a very reasonable score. It's going to stay at a 0.75. If I drop this down to 25 to just get a little preview of 20 to see what's coming. 22, sorry. What do we have? NASDAQ. Not only do we have, so it's basically like a tag in here. The small caps are still in a leading, but less leading, and they tagged in the NASDAQ technology to be like, all right, we need you guys to come back in and do some work. And they're like, all right, at least that's what we see right now. Did I picture this? I don't think I did. Yeah, this looks great. This looks very strong overall. I'm staying at a 0.75. We'll see if the Oracle kicks up to a 0.75, and it sure did. 0.75 improves. It builds on it with stronger slope, better consistency, improving time frame alignment, risk on conditions. Right, that's what we're seeing. We're moving into press always. Sometimes you probably feel a little ear burn on Sundays. You're like, they're probably doing sector rotation right now, looking at a 22 day. All right, let's mark it. I'm staying at a 0.75, and the Oracle is moving to a 0.75. I told you this thing's at a 4.5. We're not even done yet. This is unprecedented. The move from a minus, I was a minus 225. It was a minus 2.5. It moved. It jumped faster. I'm gonna give it credit on. We're gonna have to kind of, when we go back now. I've been very reluctant to make any changes to anything that the Oracle has done, because I want to see, like, when we're done here. Well, it definitely picked up quicker. It went minus 175 and then 0. Whereas I did not improve this week, and it did. So we'll look at that at some point. Maybe Tuesday. Maybe that's a good time to just kind of look at, like, what did we see? What did it see? And then I mean, we were pretty in line, to be fair. It just did it a little bit more aggressively so far. Okay, let's go do sector rotation. Sector rotation. 050326. Let's get into the charts. And this looks all set to. Oh, is this ready to go? Let me just make sure. Okay, looks good. Let's get rid of the ad here and get a picture. What do we see? We still see energy, remnant strong. We see a surge in energy from around the middle of May, but we also see a surge in technology. So those are the two most impactful things that I see on this chart. There's improvement down here at the bottom, but they're still at the bottom. So this one is like, okay, we're starting to see some signs. Remember that this is our negative remnant. I'm a minus 0.5 on this thing still. No, I'm not. That's a lie. I'm a minus 0.25 on this thing. And the Oracle is a 0. Okay, let's go 133. Okay, what do we see here? Energy. Now we have materials still there. Industrials kind of sideways. Did I go back and start making changes to something I shouldn't have? Oh, May 26th. Sorry. Yeah, I'm having weird things with my dates. There we go. Sorry, Bob Roland. Good catch. Yeah, that was throwing me off too, but I couldn't tell why. Something was like not registering right, but I didn't know what. So thanks for pointing that out. Okay. But at least I was at the left side of the chart. At least I was in column B. That's the most important thing. Okay. So good to see you, Bob Roland, by the way. We still see that surge. That's good. It's picking up, but it's still down. Or I mean, well, now it's above actually. We have that above the market. So there's some improvement here. Let's go see what the 66. This is where we're gonna have our full confirmation of what's going on. There we go. Boom. Boom. Okay. Energy's on top. Utilities are still there. Now we have technology and industrial. So we have a couple of each, but we still have staples there. No, here's the S&P. So who's above right now? We've got industrials, utilities, technology, energy. Yeah, I feel like that's a tie. I feel like it's 2-2. Now you have healthcare down here. Discretionaries, yeah. I mean, these guys are still kind of lagging a little bit. I don't know. I'm kind of on the fence, actually. I'm on the fence between a minus 0.25 and a 0. So I'm going to let the 22-day inform me. Okay, so here's the 22-day. All right, I was on the fence, but we now have only one surging, and it's technology. And then right below that is discretionary, and then industrials and financials. So with that showing a little bit more positivity, I'm gonna go ahead and let my score pop to the 0. That was my last negative. Now it's a neutral. Okay. And let's get a picture of this last one. And let's see where the Oracle wants to go here. So the Oracle says you don't have enough to justify another upgrade. It's going to stay at a 0. Balanced, not bullish, which is where we got to. I got to a 0. So I agree that balanced was kind of the word. So great. That makes sense. I'm a 0. It's a 0. We're still a full point apart here, interestingly, but let's go take a look at the VIX and see what that says. Okay. 05, 03, 26. I agree, Press. I think if anything, and this is something we like to do habitually, is to think what's more likely to come next, right? What would cause me to move my score up to a 0.25 or down to a minus 0.25 again? And which of those is more likely to come? That's a helpful thing as you look at your posture. Because if you're like, hey, most of these things are either neutral or likely to go up. There's good that comes from institutional support, not from a gut feeling. Um, I think that's important to have in mind. So yeah. Okay, let's get this to 6 months. And let's go VIX. Let's get a picture of this beauty. Nope. All the way across. Um, I've been asked this before. I only put the VIX in, but I've thought to myself, sometimes we look at the stochastic. Should I include the stochastic? And that's me asking the group. And then I was thinking, should I ask the model if I should include? I'm going to give it both perspectives today. And I'm going to say, yep, that's what we're doing today. This is going to be a fun experiment. I'm going to give it both things today with a little bit of context. Decided on the fly. I didn't take the first one. There's one. And there's one. I tend to only give the chart, not stochastic. But we sometimes look at it in our group. I gave you both today to consider. Let me know, whoops, if beneficial going forward, or if price chart is enough. Okay, I'm going to send that. I know, right? Press. This is where it's an interesting, an interesting thing that uh, the market's just sort of discounting that and like, yeah, okay, it's kind of shrugging it. So, is that inside information that a resolution is at hand, that the institutions are confident this thing will be resolved without too much impact? Honestly, that's the direction I lean. I think they have information that we don't have, and they seem pretty okay with things right now. And that's the best I can do, I think. Uh, okay, let me see here. Now, what am I going to do? Let's do that. What are we as a group going to do? I'm a 0.25, and that was from last week. 1, 2, 3, 4, 5. We were here. You can see that it did make. Did we do both a lower high and a lower low? I think I'm going to give this a lower high. We didn't have it yet on that day, I don't think. We definitely got a lower low. This is at least a 0.25 higher. I'm at least a 0.5, maybe even a 0.75. I don't know. Maybe a 0.5. I'm going to give it just that quarter of a point. We are still at 0.17. If we can get down into the 15s, I'd give it another quarter without any other need. Yeah, I'm going to do that, I think. If AI makes a strong, if the Oracle makes a strong argument, if the Oracle makes a strong argument, I will revisit my 0.5 for a 0.75 if that's what it does. If it does that, it'll be at a 5. Okay. And Gabe's like, that's not bad at all. I'm way ahead of that. Mm, okay, let's see. New score 0.5. All right. It agreed. The VIX continued its steady compression, mid high 16. It's actively dissipating. The fear is actively dissipating. Yeah, press indeed. Congrats. Let's see. Okay. Sustained move towards 14 to 15 would be what it would. Okay, look at us. Look at us. We're getting along so well today, the Oracle and I. It also okay, so what did we get today? We both went up a point. I'm a little bit behind. And I feel like Gabe's got some bullishness, but most the rest of the group is falling somewhere in this range. Yeah, between 375 and 475. Is anybody, how about this? I kind of feel like I'm like the least. Is anybody less than 375? Am I the least bullish of the group? I'm actually going to be a little sad. Steve C and I are both down at 375. I feel conservative. So funny. Mm. Risk on. That's kind of Bob Rollins a 4. Okay, so pretty close. Pretty close. 375. All right, I feel better. I think we're broadly in that range. A few more bullish. And look, I mean, where we are now, as I've said, this 4-week 5 if you start with AI, who caught it a little sooner, where it was a little more bearish and then it kicked into gear sooner. That was a great swell. I mean, this has been astounding. The model has improved. I'll even take that first one out. In 4 weeks, 6.5 points. And I've improved 6 points. In 4 weeks, that's an average of 1.5. I mean, we say that anytime you get a 1-pointer or more, that's a substantial potential move in the market. So this looks very bullish, increasingly so. So let me ask this, Bob. I agree, right? That does seem, it seems to respond faster. It got negative faster, almost too much so, though, right? It almost was like, whoa. Although only, well, actually, no, it's only a 1/4 point more. Maybe it is. I might have to give it. It might be picking up on things more subtly and more willing to take the position. I'm open to it. We're gonna have our Tuesday night discussion is gonna be search technology, and let's post facto analysis this last move and look at like what happened when, and what was the Oracle willing to do that it caught it, and is that something that, I mean, it's one event, but it's doing pretty good. Gabe says he sees the same thing with his people. Okay, but here's the question: is anybody having a hard time convincing themselves to trade bullishly? Are you feeling like the reluctance is shedding, but now you're waiting for the right opportunities by way of setups? What does that look like? Very curious. Okay, let's keep going here. Things are looking good, and Sandy's looking for some action. A little less conversation, a little more action. All right. Still more day than swing. Oh, okay. All right. Fair. Okay, here's what the I forgot about the question. On the stochastics question, not necessary for this component. Price structure is enough. Very short-term timing, identifying minor exhaustion points inside a range. It's structural and regime-based, not timing-based, expansion and compression. Stochastics can actually add noise because it can oscillate quickly. Not needed. Keep doing what we've been doing. Price chart only. Okay, that's very interesting. It's like, no, I don't need it. I love that. I think that's perfect. Okay, real quick, let's go take a look at the economic calendar while we're here, and then we'll go build our watch list and call it a day. We already did our trading plan talk. Remember, if you're new, go through the circle a little bit and find the resources, because that's where you'll find a stock log and an option log that you can use. I like it, Don. That makes a lot of sense. Tuesday, job openings. There's some real estate. There's a couple of Fed speeches. No one's really paying that much attention. Wednesday, ADP. Last time we had 62, which was positive. This time we're expecting 98, which is more positive. 98's right around the maintenance threshold. to keep a full labor market, we need to have, 90 to 100 on the private number, 100 to 120 on the public, on the non-farm payrolls. So the forecast is there, but we'll see if we get that. Then Thursday, standard jobless claims, 189, it may jump to 205, nothing there. Productivity in the US dropping a little bit. The market's not going to pay very much attention to that. Then Friday, we have non-farm payrolls. Last time we had a positive surprise of 178,000 new jobs. The expectation this time, only adding 53, which is below maintenance, but it's not, again, it's not like, oh, it's catastrophic. It's like, okay, it's not great. The unemployment rate is expected to stand pat at 4.3. 4.3 again is pretty historically low. There it is. That's what we're looking for. Let's go take a quick peek at our Fed watch. Now, with a little shuffle in the Fed, keep an eye on the Fed drama. There's some good. Have you guys seen what's going on there? The Fed drama. It's pretty funny stuff. But it has slightly tilted towards cutting, only slightly. 93 versus 6.7 per probability. When we go to 29, 88 to 10, it gets a little bit more. By September, it kicks up to 16. By October, 15. With a few people thinking it might go up by the end of the year. And December, actually by December, it's 50-50. Both sides, very, very much a state of equilibrium for the end of the year, mostly predicting interest rates to be exactly where they are. Okay. Yeah, I mean, unfortunately, Gabe, the housing market really is outside the purview of the concerns of the Fed. Right? They have two mandates for Fed for monetary policy: inflation, employment. I've heard politicians talk about they need to lower it so that the cost of our debt's lower. Their concern is not the cost of debt, and their concern is not the housing market. If someone were to say, here's what it should be and why, and here's how I can prove that, okay, but for now, all they care about is the employment market. Do we have a full labor market? And inflation. Is inflation at or near 2%? Those are the two things they drive towards at any given time. And everything else is incidental to that. Maybe so. And like I said, if someone were to say, hey, if we were to do it this way instead, I think that the biggest concerns are always the unintended consequences of, modifying policy to accommodate something else, and then all of a sudden losing control of inflation or losing control of labor, and then we have a huge choke in the economy. And anyway, so Well, and you know what? Here's the thing, press. Remember, uh, all it's doing is pricing in based on where people are now. No one's really willing to take a position, is what this means. So is it saying that like they're predicting at the end of the year that's where it's going to be? They're saying that no one's willing to take a position one way or the other. I think you and I both know very unlikely at the end of the year, right? Um, with what's going on and what the impact could be. Uh, if the strait stays if the strait stays closed, let's say for 3 months, and oil just keeps ticking up and gets towards 140, 150, that's going to be global recession. And it is going to lead to higher prices and higher gas and unemployment. And then when unemployment starts to tick up, then the Fed has to act, right? Obviously, if that happens, if prices are going up and unemployment is going up, their two mandates are at odds. Inflation's going higher because the higher price of gas is causing everything to cost more. But at the same time, employment is now going to take precedent, and they're going to act to accommodate that. That's when we'll see them act. If the employment situation gets worse at a faster rate than inflation, then they're going to act to cut rates despite the fact that it's not going to help inflation. Um, uh, 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 the Fed is very willing to change the names of the methods they use to print money, raise inflation. Yeah, I mean, I think that's a pretty across the board governmental willingness to print money. uh, so, all right, let's go do our watch list. Got a little off track. We got to go fast now because I didn't even realize that. I didn't even realize we got distracted by that. That was a great discussion though, because I think that's the thing that could throw the wrench in the works, right? We would all agree. I'm gonna go fast today. Apple's too overextended. Archer Daniels overextended. AMAT took a hit. AMKR looks nice for me. If you have to drop, feel free to drop. This list will be included in today's email. Amazon, I like Amazon on a pullback, help holding up after earnings. APH, if it does hold up after earnings, so there's plenty of things here. ASX, obviously, I like that one. Came out late Friday. Ooh, AXP, I'm a little uncertain of. I still like BABA from Consumer Discretionary. BAC, I took a little profit on Friday, but still have some. I'm still bullish on it. BCS, no, I still like Citi. I still think Citi could turn. Siena's nice. Gave a kind of a big signal. Coherent, I like, but it's got earnings. I'm going to put it on, but recognize that earnings disrupt things. I like Cisco, but Cisco's a little overextended. Still want to keep a good eye on it. Dow, look at Dow trying to recover. No to GE, no to gold, no to GM. Yes to Google. Any flag pattern can get me thinking about it. I still think Goldman looks good. Intel, if it would pull back, let's put it on the list. We're gonna visualize that into a trade for ourselves. Small caps are good. Lumentum earnings. I like LRCX. MasterCard, Meta, Monster. Marvell looks nice. Still very volatile, but it's bullish. Morgan, Microsoft, Micron, I like. A little overextended, but if it gives one of these, boom, boom, it could go fast. Netflix, no. Nvidia, yeah, I'd consider Nvidia. Palantir, no. Q's look good. Rocket Lab. Um, I was looking at Rocket Lab. We didn't do a trade. I didn't do a trade on that, did I? No. Um, I gotta go look at my account. Maybe I did. I have a line there that. No, I didn't do it for the group because of the. I remember now. We were like, no, but I can't remember if I put one on. I don't think I did. Otherwise, I would have been super mad by that big bearish engulfing pattern. Ross Stores looks pretty good. RTX, silver, Sandus looks amazing, just overextended. Amazing, overextended. Tesla's trying. I'm putting Tesla. It's been on my list. I said it looked like it could go. TSM still looks good on the list. Viking Cruise, kind of chopping around a little weirdly. VOD still looks good. Look at that. Who stayed in? Yeah. Patience paid off. I'll tell you what, the only reason I stayed in was because I had the stock, not the option. If I had the option, I would have closed because it was the second hiccup. And I'm like, no. But I'm like, wait, I don't have time considerations. Stayed in. Very nice. WDC looks good still. Walmart. I'll still put Walmart on my list, but it's tough to find entries. There it is. That's today's list. Let me put a date on this so I don't forget which one that is. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, it was almost back to 25 on our list. That's pretty good.
This is
the AMAT. I closed mine when it broke. But if you have it, I would actually still be okay with it. You're yesterday on Thursday, you were back above the money. Right now, you're right at the edge of that. So I would say, if you're in it, I would actually hold to see what happens going into next week. That thing could still come out okay with those strikes. In which case you'll do much better than anyone who took the loss. All right, you guys, it's great to see you all. Great to see you, Press, and everybody else. Have a great rest of your Sunday. As always, happy trading.